Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest in the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today's guest is Paul Brennecke, and he is a founding partner over at Sortis Capital. Paul, welcome to the show.
Thank you. Good to be here.
All right, Paul. So a lot to talk about today. So a lot of business owners, entrepreneurs, executives, investors, accredited investors that watch this show, and we're going to be talking about acquiring senior loans collateralized by real estate. So big topic. And just to get us started, Paul, we'll start this episode the way that we start them all, with what we like to call our Mission Matters Minute. So, Paul, at Mission Matters, our aim and our goal is to amplify stories for entrepreneurs, executives, and experts. That's what we do. Paul, what mission matters to you?
Well, at Sortis Capital, our mission is to safeguard our investor capital and generate above market returns for our investors. We prioritize the financial goals of our primarily individual investors. We don't have many institutional investors, and that's really by design. We tailor our funds and investment to support the financial goals of these individuals and their future retirement. Our investments are driven by our commitment to strong partnerships with our clients, whether they're borrowers or equity partners. We're known for our hard work and energy and what we put into these investments to achieve high performance. We also actively contribute to the well-being of our communities, and we're really behind sustainability, both financial sustainability as well as environmental sustainability. So those are core to everything we do.
Well, Paul, great having you on the show, and I want to take it maybe a step back or two, and we're going to get it further into Sortis Capital as well. And I also specifically want to get into more about your decision and your role in creating these relationships, because I always find it interesting when someone is saying most of our investors aren't necessarily institutional. So we'll get into that as well. But that being said, how'd you get into the business? Take us back. When did you get into either real estate or in this side of the business? How'd that start for you?
Well, I come from a 3-generation real estate family, so
Wow.
we've been doing real estate at the dinner table since I was a kid. So it's really all I've ever known.
Whoa. What was that like in the holidays? I can't leave that one there on the table, pun intended. What was Thanksgiving like? That's pretty cool to me.
Well, family businesses are always entertaining in a lot of ways. So my grandfather started it. My father took it to the next step, and I only lasted a short time. I'm entrepreneurial, and I actually was only there less than 2 years after college and decided I need to go out on my own. And
but you experienced then, because you experienced cycles and even hearing them talk about it even prior, when you were younger, right? That's also interesting, because your context isn't just what happened in 2008 or 2002 or even the 80s, or you're going way back on that one. That's interesting.
Well, 80s are way back for me, so don't make me.
No, I mean like that. No, I mean when you were a kid. No.
I know. So I was a kid. I was a kid in the 80s, right?
Yeah.
So, and I remember dinner table talk was in the 80s recession of which one of the builders and other people that my father was working with that were struggling and having challenges, and somewhat even a little bit in the 70s, I remember some of that. That's when my dad was kind of headlong in the business, taking over from my grandfather. So it has been table talk forever, and learned a lot during that. Kind of got it ingrained in you. But yeah, I lived cycles even as a kid, hearing about things being tough for people we did business with.
Yeah, when you was there a point in time? I know you grew up in the industry, so to speak, but was there a point in time when you were, or was it just a buildup, or was it just natural, to where you're? Because sometimes people kind of go the opposite, they don't want, I don't want to be part of any of this or any real estate if my family was in or whatever else. Was there a point in time when you're like, no, this is what I do. I need to find my niche, but this is me.
Oh, it was definitely trying to find a niche. So I was actually I started doing computer programming when I was in high school and college, and did a lot of freelance programming, and always thought I would do tech things. Um,
Oh, so
I,
that was your rebellion, and then real estate sucked you back.
yeah,
I got it. Okay, I was
yeah.
just curious.
Well, I worked at EDS, Ross Perot's company,
Oh yeah.
for a whole year out of college. That's all I could last. It was a little too big company and a
Hmm.
little bit too rigid for somebody who's entrepreneurial.
Yeah.
Learned a lot during that short period of time, primarily that I didn't know that I wanted to be in tech. It was different than I
Hmm.
envisioned as a freelance programmer. So when I decided to leave that, I was in San Francisco, went back to Portland where the family business was.
Hmm.
My dad said, come work here for a while till you figure out what your next stop is. So I did that for a year or two and really helped them a lot with their tech. So I was on the finance and tech and kind of accounting side of the business. And um, I just decided after a year or two of doing that that I really wanted to go out and be an entrepreneur. And I just remember
Mm.
my conversation with my father when I told him, I said, "What are you going to do?" I said, "I don't know, but I'm going to figure something else out because it's not this." So, so
Were they happy? Do you remember? Like, was that like a good moment? They're like, finally coming back to entrepreneurship. Were they like, or they're like, you're kind of signing up for some pain, buddy, but you already know what you're in for.
yeah, no, my mom was happy. She
Yeah.
felt that was in my best interest. My dad, not so sure. I mean, I think a lot of parents want their kids to
Hmm.
come in the business. I'm not really sure whether he was or not, but
Yeah.
it was really about what I wanted to go do. And really my first thing outside of that was going out and doing land development. So it
Mm.
was early 90s and I didn't know it, but it was a great time to enter development. I kind of knew, but really didn't give
Wow.
it that much thought. It was the end of the late 80s recession and things were just starting to come back. And then, the Gulf War hit and
Hmm.
things were a little messy, but everything after that for 7 or 8 years went great in the land development world and really launched me into development and real estate and kind of grew from there.
Yeah. So when did the loan side of things come up in Sortis? Like how did that all come about?
Well, it was primarily development through the
Hmm.
90s and I think the early 2000s. We did some loans really because opportunities came our way. People we knew that
Mm.
needed capital. We had investors, primarily investors on the equity side of the
Hmm.
business, but those investors always like cash flow. And in development, you don't typically get cash flow.
Yeah.
So we started doing some small syndicated loans, just putting our investors into them,
Mm.
and then started doing some distressed note acquisition
Hmm.
and getting into more complex issues post 9/11 on some hotel deals.
Mm.
Got involved in some bankruptcy deals that involved notes.
Mm.
And then did a little more lending in the mid 2000s, but really the Great Recession hit and was mainly focused on distressed investing
Hmm.
during the Great Recession. But about 11 or 12, we really decided as the world was getting a little better to dive more into lending,
Hmm.
doing more syndicated loans, looking for financing partners to do that. And then up about 15 or so, we decided to start our first fund.
Mm.
So that's when we really kind of crystallized the idea and got into the fund side of the business.
Yeah. What are your, and I always try to work in, I always try to work in like a pay it forward question in these interviews, Paul, like for those that are just getting started or those that are at different points in their career. And one of the things or one of the themes in your career that I find interesting among others, but one of them is just that concept of I'm using this word, but you weren't rigid. Like the market changed, the opportunities changed, even in developing. Like you didn't when with Sortis, you didn't just like say right off the top, we're going to start even a fund. Like you started by looking at what the market was giving you and solving a need that somebody in the market had and providing value through the lending, even in the beginning, which then and ended up towards taking you to that route. So the question is like, what are your thoughts on those that are out there right now that are kind of haven't quite found their footing yet? So it's more of a thematic question that haven't quite found their footing yet in real estate or even in other portions of their career that are really looking to hit that next level and to kind of like to excel. Like what are some of the things that helped you get there?
I mean that's a good summary actually. I always look to be opportunistic. If
Yeah.
you get really programmatic and really rigid, things can pass you by.
Hmm.
It goes to something my dad told me back at the dinner table talk, which he was
Yeah.
talking about home builders going broke, and he said,
Mm.
the way cycles work, if you're a home builder and you just keep building homes and you don't look at other opportunities, at some point you're going to hit a cycle and go broke, which
Mm.
was very true back then. Um, and that just got me thinking about, how I approach
Mhm.
development. And even though I started out as a lot developer and we still
Yeah.
do loans for lot development, have done, a little bit here and there, working on a
Mhm.
large development deal now.
Mhm.
I never got programmatic. And, when it seemed like it was time to shift and the trends were shifting a different direction, we would
Yeah.
shift. And when opportunities came up, you try to use that same skill set
Mhm.
and the same group of investors to pivot into those opportunities.
Mhm.
Now, for a lot of years, I heard from investors and others, why are you doing all these different things?
Yeah.
And I said,
Like you
because
have to focus on one, or you have to, and I
yeah,
get it. Yes.
I heard that a lot. My advice to people would to not do that. I mean, I
Yeah.
really think that a lot of opportunities have come my way. They haven't all been,
Mhm. Of
home
course.
runs, but you learn a lot along the way by doing that, and you learn things maybe that you're going to like better. I'm glad I'm not just a lot developer today.
Yeah.
I'm glad I've learned a lot more. I've developed almost every product type there is out there,
Mhm.
and have learned which ones I enjoy, which ones I'm good at.
Mhm.
It's like with lending. Lending was not something I went to school for, or got trained for. It's just something, if you understand real estate, you can be
Mhm.
anywhere in the capital stack. You can own it, you can lend on it.
Yeah.
You can be anywhere there and be successful at it. So we just try to use the skills that I have learned and our company and our team has learned over the years to be
Mhm.
effective in investing anywhere in the capital stack. And lending just happens to be one area where we've grown some real expertise.
Mhm. Yeah, and I like that word that you used better. I'm going to take that one away. Programmatic. You're right. That is what it is. Sometimes people and just this concept. Sometimes even not intentionally. And I mean in entrepreneurship in general. I don't mean necessarily just in real estate, but just that the death of many businesses when cycles change is that's the way we've always done it, right?
Yeah. Well,
that's
I mean,
that's the scary. Mhm.
being focused and programmatic isn't necessarily a bad thing at
Agreed.
all.
Yep.
I
Yep.
don't mean that.
I
I
agree.
just mean that if you get too rigid about it, opportunities will pass you by.
Yep.
You have to keep your head up, and I felt even at times I have my
Mhm.
head down and don't see the opportunities around
Yeah.
me. So I always got to take a step back,
Mhm.
view where the trends are going, view where you want to be, and
Yeah.
try to figure out these opportunities coming at you fit within that.
Mm. Thank you for that. And I want to circle back to Sortis here. So, what are some of the things that you feel makes Sortis unique and this vision you have for the company unique?
Um, I think it's some of the things we're talking about here.
Mhm.
That we're nimble. We're
Mhm.
certainly not a Blackstone or a Starwood Capital.
Yeah.
Um, that we're not programmatic.
Mhm.
That we try to. I always equate our business style to surfing a little bit. Whatever that wave's
Mm.
giving us, we have to take. And if there's no waves, then we have to be
Ride the
patient, right?
wave.
Yeah, and I think you have to. But the thing you have to remember is you can't chase waves. You have to be
Oh
in
yeah.
front of them. Ahead of the wave a few times too, and paid the price for that when you think too far ahead. So it can cut both ways.
Yeah. Talk to me a little bit about the products, whether it's the Sortis income fund or the lending that you're doing, the private side. Like talk a little bit more about the products.
Well, as I said, we're in all parts of the capital stack.
Mhm.
So Lending just happened to be our first fund, but
Mhm.
I've been a developer, which means you're raising equity, my whole
Mhm.
life for 30 years. So, now we offer products in all categories.
Mhm.
We have some opportunity zone funds, which are primarily equity and development related, just by especially in the markets we're in. So we're doing a big push to grow that REIT this year. We've got a lot of product in the pipeline for
Mm.
that. And we're working on an opportunistic fund to try to take advantage of some of the dislocation in the markets now and some of the distress. And that'll be primarily hospitality based,
Mm.
hotel, but we'll look at other products also. With interest rates and other challenges in the market, there's going to be a lot of opportunity. And that fund will, again, kind of play anywhere in the capital stack. It could acquire debt. It could provide preferred
Mhm.
equity. It could be, pure GP equity. It's really wherever the opportunity presents itself.
Mm.
I like to say we're deal focused. We try to
Mm.
identify great opportunities, great collateral or assets, and then figure out what the financial solution is. Work
Mm.
with the borrower, owner, note seller, whoever it may be, to try to come up with the best solution for the asset.
Mm. Talk to me about real estate in general. What excites you in the market right now? And it could be on the lending side, it could be on the physical property side, it could be in development. Like just what gets you excited? I'm interested in your vantage point because you've been doing this a while.
Well, the one thing I always say is a common theme between
Mm.
what we do is placemaking.
Mm.
Um, I believe successful. I mean, real estate's just bricks and mortar, right? It's
Yeah.
it's not successful on its own. It needs tenants. It needs foot traffic. It needs all kinds
Mhm.
of things that make real estate really successful. And starting
Mhm.
with location, right? Picking a great location, the old adage, location, location, location. But to
Yes.
me, it's experience and activity in today's market. And it's something that I've been talking about. I
Mhm.
talked about experiential real estate 10 years ago because I love mixed use. I loved hospitality. I
Mhm.
built my first hotel in the late 90s.
Mm.
And I've always liked the energy that those uses bring together, and that the mix of uses can do where you get 1 + 1 is 3. So
Mm.
think if you have a great restaurant or a great coffee shop on the ground floor of your apartment building, it becomes more attractive. That's a
Mhm.
real simple example. I throw the opposite example is a lot of developers are out there. I'm going and that to me becomes placemaking and really drives long-term value in real estate.
Mm.
That's what got us into investing in operating companies. We used to just dabble in it. We set up a fund in COVID and did a lot of investment in
Mm.
operating companies. And really, the type of companies that we valued as tenant, most of the initial investments were investments in companies that we would have loved to have as a tenant.
Mm.
And by investing with them, they became friends, and we were able to attract them and work with them
Mm.
on on projects. So I think that's the part that I'm most excited about in creating that
Yeah.
really interesting place that people want to be around.
Yeah.
And it makes real estate a lot more than bricks and mortar.
Amazing. So, Paul, you mentioned as we kind of open the interview that you're like the majority of your investors are not institutional, and they're going to be accredited investors, going to be other individuals. Can you maybe just elaborate on that a little bit more? Because I always do like to kind of highlight that for people that are listening.
Well, my career's kind of gone almost full circle. So I started
Mm,
out with individual investors, friends, and family, like most people do who get in
yeah.
development business. And then we had so many investors that I felt like all I did was spend my time dealing with investors between
Yeah.
raising capital and answering questions and doing reporting.
Mm,
And then I started getting into larger deals, and the numbers got large enough
mm,
that trying to get that many investors in was a lot of work,
yeah.
and try to manage all those investors. So I started working with institutional investors, and that was fine. They were more about just the return, though. What I
Yeah.
missed about those days was really there was a good connection with the
Hmm.
and and you just felt really good. There's nothing better than hitting a home run, and everybody gets to
Yeah.
share in the rewards, and it
Yeah.
makes you feel good, makes the investor feel good.
Hmm.
I have probably my longest term investor is one of my best friends from high school.
That's amazing.
And he always tells me, my retirement depends on you. Don't put any pressure on you or anything, right? So, but I'll tell you, I take it
Mhm.
that way too. I mean, I
As
will.
you should, and that's why I asked the
Yeah,
question, because I understand what that means when you said that. Like,
yeah.
it's
No,
not just there's a heart, there's a pulse, there's a culture to the company that chooses to do that, because it's not just, and not saying that the return doesn't matter. Of course that does. All that matters, but who you take on as investors is important as well. Please continue. But I love that. So your high school buddy is
yeah,
in.
yeah. Well, it creates a mindset, right?
Yeah.
Of I refuse to lose. I think I'm a Capricorn, not a big star sign guy, but that's kind of the way we're built, right? Where I do not like to
Mhm.
lose. And, I can't say you win big on every investment, but
Sure.
I'll fight to the death not to lose money.
Yeah.
And it's just kind of core to what we do. And, in our income fund, we've never lost money. We actually have a $2 million gain over the last 5 years
Mhm.
on what we call, a bad asset or a challenged asset. So
Mhm.
when we have a bad loan or when we have to take an REO, we've actually made several $1 million to the positive. And
Mhm.
that's just because you don't give up. You're more creative and you know how to deal with them. I mean, we've done a lot of distressed investing. We actually go in and buy challenge notes. So
Mhm.
I think it's really a strong attribute for what we do. But going back to the investors, I enjoy winning, and I enjoy winning for investors and having them be
Mhm.
happy about it. And and you go through. I went through the Great Recession, and
Mhm.
I know there's a couple deals I fought to the death on, and we got
Yeah.
out, and we got our money back, and we didn't make much, but that was a win in
That's a win, though.
2009 and 10. Yeah,
We got our
and
money back as a win.
yeah, well, and I can tell you it was not easy, but
Yeah.
so that's kind of the philosophy you have to take, though. It's easy to give up, and it's hard to persevere and be resilient and try to win, and that's I think a culture you've got to build, and we try to
Mhm.
build that around here and find people that are the same way. And
Mhm.
as I said, it's easy to give up, and it's hard to persevere to the finish line, even if especially when you're not making money, when you're just recovering.
Mhm.
And but that's what you've got to do to win.
Yeah, it's great. Paul, first off, it's been great having you on the show and learning more about your background and learning about more about Sortis Capital, the products, the journey, and what you look for in an investor, and also in the market. So thank you for that. If somebody's listening to this and watching this, Paul, and they want to learn more, I know we just scratched the surface, and we can only go so deep on a podcast interview when it comes to investment returns, things like that, because obviously you want to provide documentation, all that good stuff. But that being said, if somebody wants to continue the conversation with your team, like how do they do that?
Just reach out to us at sortiscapital.com. We've got an 800 number on there and email, and you can also pull information off the website. And we've always got somebody standing ready to talk to you and share more. And I try to make myself as available as possible to investors also, so that you learn a lot about what the investor wants by doing that. So it's
great.
helpful.
And for everybody listening, just so you know or watching this, we'll put all that information in the show notes, so you can just click on the links and head right on over and check out Sortis Capital's website. And speaking of the audience, if this is your first time with Mission Matters or engaging in an episode, this is a daily show. Each and every day, we're bringing on new entrepreneurs, new executives, new founders, new ideas. If that sounds interesting or fun or exciting to you, hit that subscribe button, because we have many more individuals coming up and we don't want you to miss a thing. And Paul, again, thank you so much for coming on and sharing your story. Really appreciate it.
Yeah, thank you for having me. It's great.